Hey everybody, welcome to Trading Caps Exclusive Analysis. Today is currently July the 24th. Yesterday we touched base on the emerging markets breaking out. So our Sunday market prep video for the weekend touched base on emerging stocks. We touched base on a variety of individual stocks, but also the ETFs for the emerging markets. We touched base on the VWO, the EWO, the EWZ. So there was a technical breakout that occurred in the EWZ as well as the other emerging markets. You saw China stocks incredibly strong today, Brazilian stocks, Argentina stocks. All the emerging markets showed an incredible amount of strength. Now, what's interesting about this price action is EWZ is starting to get a little extended and it's coming up into some major resistance. These pivots as well as this major downside target. So although we said that this sector is likely trying to break out, this is a massive wedge pattern on EWZ, and if it does break out to the upside, there's going to be plenty of opportunity to get a good valid long entry. However, we still have to remain clear that this is technical resistance, this downsloping trend line. And let's be clear, you are coming into that resistance in a pretty overbought daily chart situation. All the daily moving averages are in bullish alignment at this point in time, but we have to remember that the emerging markets are extremely sensitive to what? The DXY, the dollar, and specifically the US dollar. And what was the strongest asset when inflation was rearing its ugly head? The dollar in 2022. Inflation has come down from a peak of 9.1 all the way down to 3, and you've seen the dollar get absolutely decimated. Now the dollar has made this little bit of a capitulation sell-off, and it's putting in this V bottom. Whenever I start seeing these V bottom reversals in major currency classes, and what I mean by that is if you simply draw this trend, you can see you had your initial sharp move down, and now you're having a big move to the upside, as if many other investors who capitulate on the dollar are now starting to see some more bullish investors coming in. Now there's a lot of work for the dollar that has to do in order for it to reclaim its uptrend. But when you look on the longer term perspectives, there's still the weekly 200 MA in bullish alignment that we have to respect at this point in time. And we never got that weekly confirmed breakdown as of yet. It was saved by another weekly close back above this key 108.86. And with emerging markets breaking out right now and the dollar potentially putting in a reversal, that could mean that there maybe is going to be a fake breakout in these emerging markets. Specifically on Wednesday's meeting, we have Powell. If Powell comes out hawkish, that could send the dollar higher and it could dump the emerging markets lower. So I'm looking at some potential short levels on some individual ETFs. It's very, very risky, so do your due diligence. But we just have to be mindful that if the dollar is catching a bit off the lows, it should put pressure on the emerging markets. Even some of the names like StoneCo, which I do like as a long trade, I just want to see a little bit more consolidation and really wait for that definitive signal from the currency markets and Jerome Powell. But again, there's going to be plenty of opportunity if these patterns do break out to the upside. This is another one that could potentially move quite quickly, quite fast. Even if you look at Vale, which is one that we discussed on the weekend, it had an epic breakout to the upside, closing above these key pivots, and this one's looking poised to at least tag the 200 and then likely even higher from there based off of this consolidation pattern. So definitely be interested in the energy sector as well as emerging markets if the Fed comes out more dovish and if they really put into words the fact that they're pausing or they're going to be cutting rates. If there's any signs of cutting rates, then typically that's very negative historically speaking for equities. But I do think that initially for maybe a 1 or 2 day or a week rally could be sustained considering there's still a lot of exuberance and market cash on the sidelines. Overall, just be very, very cautious if you're tracing this entry. Rather, instead of buying breakouts, look to buy the pullbacks back to support where you get a little bit of a better R&R reward ratio. Take care, everybody. Please give us a big like down below, subscribe, and definitely check out our website for more trading insights.